Altcoins have been popping off over the last 24 hours, 5, 10, even up to 15%. And over the course of the last week, this first week into 2023, some of these altcoins have done 30, and in the case of Solana, 60% from their current cycle lows. And so is now the time to be investing longer term into altcoins, or do we still have far more time left? What we've seen in history is these are the times that people lose the most money. So if you can avoid these traps right now in the market, you're going to be here for that next bull run, that next altcoin bull market season where the fastest gains are made, not the riskiest gains. So let's dive into that in today's video. Make sure you do like and subscribe to the channel, bell notification icon. If you want to wait to see what the value is in the video, by all means, I'll just remind you throughout the video as well. Today, we're going to be looking at Bitcoin, the total cryptocurrency market caps, ETH, ADA, and some of the other major cryptocurrencies as well, to give us an idea of the macro timeframes. Are we seeing those lows form now? Should we expect further downsides? That's what I'll look at. There's other two major differences we need to look at today as well, or understand. One, longer term swing traders, essentially what people call investors, when essentially they are traders. If you're buying something and looking to sell it in the future, whether that's a week from now or a year from now, or maybe even 3 or 5 years from now, you're still a trader. You're basically trading your dollars for something else, selling that thing in the future to make those dollars back. So that is a trader, not an investor. And you can also be a short-term trader as well. Minutes, hours, days, whatever that may be. So there is still two options here in terms of the timing as a trader, but a lot of people refer to the longer term one as an investor, even the short term, but essentially you're all traders. Once we understand that, it makes life a hell of a lot easier to get through the charts, to understand where those confirmation levels are in terms of what time frame we're looking at. So we need to look at Bitcoin, the total market caps, and of course, those altcoins as well. Now, these are very common thought processes that happen for all traders, myself included. They never go away. This sort of thing is around the market moves to the upside, back to the downside, and then the mind games that go on when we start to see rallies in the market. So we need to really have a clear idea of what time frame we're looking at. Otherwise, we get badly burnt in the markets, which we'll have a look at in the charts today. And it happens every single time. Once we start to see these pumps to the upside, a majority of people get burnt. That's the way it is in the market, because we just have to learn to manage our emotions. And to manage the emotions, you need to have a written plan. Essentially, the emotions are the market starts to move up. We're used to a particular price, like we saw with Bitcoin at around 16K, and now all of a sudden it's at 17,200, nearly back at the low that it was at in June of 2022. So it's essentially been trading around a very similar price range when we take the tops and the bottoms out for the last 6 to 7 months. So the market is too high now because we've got used to a price. We're going to wait for the price to come back. It does come back, and then we say, oh, it's going lower. We're waiting for the lower and lower price. And this is what happens when you start to get that mindset of Bitcoin's going to $10,000. I do discuss that a lot because it is a very big barrier for a lot of new investors, saying that it should go to 10K or it should go to 8K or 9K because they heard it from another investor or trader out there. The critical thing is to have your own ideas and to work out your own plans. From that point where we think the market is going lower, what happens next? It starts to turn around and pull away, similar to potentially what's happening with Bitcoin. It's on a very small scale. You know, it's at 15,400 a few weeks ago, and now we see it at 17,200, waiting on the pullback. That doesn't come, market keeps going up, market's too high, waiting until things settle down. So it starts to pull back, and then we're going to wait until things settle down. I hear that all the time, and you see it in the comment sections of many, many videos. Things are a little bit turbulent. I don't know whether we're going to get a recession this year, what's happening with the Fed, what's happening with interest rates and inflation. We've never been through these environments. Bitcoin, it hasn't been through a bear market from the US, you name it. People wait to see how things settle down. But if you wait for things to settle down and they go up, then you're basically stuck again saying, I'm going to wait for the pullback. The money is usually made in the confusion. It's made in the confusion at the top and the confusion at the bottom. The confusion at the bottom is basically around, I think things are going to go much lower. If they go a little bit lower, Who cares? You're not trying to catch the exact bottom. And then the confusion, or the money is made at the top with the other confusion, thinking that prices have to go a lot higher, when in fact the chart is showing that they're not going to go much higher at all, if in fact they have already topped. So now we get to the point of markets are too high, we just don't want to buy, and just wait on the sidelines until things start to pump up. The flip side to this is we buy in at those tops because you can't believe that the market is actually at these levels, and you're going to miss out, which is similar to what happens in the Wall Street cheat sheet here, where you have this the belief and the thrill, and the market just keeps going. I'm not going to be able to afford a Bitcoin at $50,000 again, and then of course, here we are at 15 to 17,000, and so that whole psychology of the market rinses and repeats. And so I bring that up at the beginning because we've seen such big gains from some of these altcoins over the last 7 days. I've talked a lot about Solana. Give me that tally down below in the comment section of how many times I've mentioned I sold Solana at $160 on that way up. I was called all sorts of names, which is pretty much why I continue to bring it up, because I was stupid, this, that, the other. It's going to go to 500 or 1,000. I want to sell out when things are going crazy. Now, Solana's down at $16, so a 90% drop from that point. But even just last week, or a couple of weeks ago, it was at $8, and this thing has just moved up. So again, breaking up those two different types of traders, you have short-term, which there is fantastic opportunity at the moment for short-term traders. Think of the minutes, the hours, the days. There are some fantastic opportunities. And if you want to stay closer or more up to date with shorter-term trading, go and check out my brother's channel, Michael Pezzino. I'll leave a link in the video description for that. He focuses primarily on the short-term trades of the cryptocurrency market. It's a trader of over 12 years in commodities and stock market, so leverage trading. That's been his game. Go and check the video out, so his channel out in the description down below if you want to learn more about that short-term trading. I like to focus on the bigger term cycles. And that's what we look at in terms of the macro confirmation for altcoins in general. And so we've had those bigger moves here. People potentially feel like they've missed the boat. They could have got an $8 Solana, now it's at 16. So they start to jump on the bandwagon here, not only to see possibly the next few months, the markets start to fall back. And that's exactly what we've seen time and time again when we take a look at the total cryptocurrency market caps. But it's best shown here in the Bitcoin chart, as we have so much more data for BTC. And it's the same sort of thing that happens time and time again. It's that catching of the falling knife. There are plenty of times in every single bear market to try and catch that falling knife before you see a pump up, falling knife, pump up, falling knife, and then eventually you get that accumulation period. Same sort of thing happened in the previous cycle. The drop, you're buying that dip, you're getting screwed again, you're buying the dip, and then the market falls into a final capitulation zone. And this is the area that I think we're potentially in, similar to what happened in 2018 or December 2018 and early 2019. You can see the timing is working out pretty well. We've got an exact, or pretty much on exact time frame here of about a year from the top to the bottom. And should this go a little bit further and we just sink into another low, because we're not trying to call the exact low here, but the chart is definitely looking like we are bouncing around at a bottom and continuing to form that base. Maybe we fall into something like what happened in 2014 and 2015, where we had that low of 411 days from the top, and then to that second low was about 631 days. So that puts us right out into 2024 with the possibility of this the low in November being that first low before we see another low. So this as well, what happened in 2019, so 2019, we had the low form in December, then we had the pump up for 6 months, and then we had another 6 months down, a little pump, COVID black swan event happened, and then the market takes off from that point. There were several opportunities through here as well, but in terms of the timing aspect, what we've seen in the past, we could be in for this next major move to the upside, which I think is fantastic trading opportunities, but you won't see the confirmation for the macro until the monthly swing tops are broken. You can see that on every single previous cycle. All these monthly swing tops, they're finally broken, towards the end of the accumulation in 2015 and at the beginning or nearly towards the end of that particular small accumulation in 2019 before that first pump happens. And so if that is the case, the areas that we're looking for in a break, looking specifically at the swing chart here, which you can find in the video description. So the link is at the top here, TIA Gann Swing Indicator. This gives you fantastic support and resistance levels and major pivot levels in the market that show signs of strength and weakness, and essentially the probability that the market won't see further downside. For the current price ranges, that level on Bitcoin is around 25,200, and there is a second point now at around 21,000, 21,500 as well. So if we start to get a move up and a break of that 21 to 25K level, we'll probably see another low, but there's just more possibility. The probabilities start to swing on the side of a higher low forming rather than a weaker move and a lower low forming. So any of these levels here, ideally the 25,200 level getting broken, you could probably kiss your $10,000 BTC goodbye. And I'd probably say even above that $21,000 level, which is this swing just before the market dumped on the FTX news. That's pretty much where I'm getting the kiss your 10K Bitcoin goodbye, because the major levels here, like we've seen in the past, once those areas are broken, you can see all of those swing tops were lower until they weren't. That was the breakout. That was the pump up, potentially what we're about to move into now in 2023. That was the signal that the macro had broken, and we're basically in the process now of finding higher lows and getting ready for that next bull market. In terms of timing, it can still be many, many weeks and months away. In the past, we know that we've gone December, so this is December 18 to December 19. That's your 12 months, and you got a higher low in that point. So if we count forward 12 months from here in November, then we're going to look somewhere at the end of this year. And in previous videos, we've definitely looked at a higher low forming into November, or at least the price of November, where November closed in 2022, it's going to be higher in November of 2023. So history has proven that each of the times that we get these major breaks of the downtrend, we do go on some sort of move to the upside, something that is pretty significant for a lot of investors. We can see back here as well, even this move just out of the low, that was about 100%. We know the low was about $150. Tops were about $300. No, you can't see it on the side here, but essentially that was the move back in 2015. So it gives a great trading range opportunity. But what tends to happen is investors get caught out buying these tops again, based on the psychology of missing out, thinking that the low is in, you're foolish, or should have got into that before everyone else. And then you start to see the market fall back over the following weeks and months, small pumps, and then you get a potential dump again. It happened with the COVID dump. It happened in 2015 as well. We don't know where that low is going to form. But this is how people lose money every single time these markets go on particularly good range trading opportunities, trying to catch that bottom, trying to catch that next top before the market potentially skyrockets. The main thing is it will probably not happen at these lows, especially when you've got altcoins that will not make it into that next cycle. That's what I look at in the next couple of charts here. This is the total cryptocurrency market cap. These are the areas that we've been following for capitulation zones, basically bottoms to be forming with the total market cap. This includes everything out there, stablecoins, Bitcoin, ETH, altcoins. We've touched into the final capitulation zone. And in terms of the downside here, the previous cycle was 88% down from top to bottom. Currently, we're at 76% down. If you take off the stable coins of about 140 billion, so it'd be 140 off 800, gives us about 660. So 660 puts us in around just above halfway in this zone. So that's a reasonable good area for a low. We could go a little bit lower, but remember this does also include Bitcoin and ETH. So this may be a good area for a low, somewhere within this zone of about 500 to the current levels of about 700 billion market cap for the total. So the warning with altcoins is that many of them are just not going to make it. There's 20,000 of them. Why is any one more special than the other? And why not any new altcoins? Stuff that might have to do with AI, which is potentially the next big narrative that's being pushed out in tech space, in the media. It's probably going to be a new narrative. That's what's happened every single cycle before that. And if you've only been through one cycle, go back and research the other cycles. It happens every single time. There'll be a new narrative. And so it's very difficult to want to hold, in my opinion, hold those old altcoins which have been through a cycle and have had their hopes and dreams crushed when there could be new hopes and dreams being built right now. A lot of new marketing coming out. And so when we look at the total cryptocurrency market cap, excluding Bitcoin, excluding ETH, there's still no confirmation that we're about to go through an accumulation period like we've seen in the past. The timing is all pretty similar to the Bitcoin cycle and the other total cryptocurrency market cap. In terms of the low, we also see the breakout and big ranges to trade here. So you can see from the low to the top, that was about a 250% range within altcoins. And so some of the potentially dead altcoins will be fantastic trading opportunities. Remember that short-term trading opportunity here, trading for more USD or maybe more Bitcoin or ETH or your favorite altcoin. But in terms of the longer-term signals for the macro, there's still nothing confirming here that it's about to break out. And those levels are going to be at least a consolidation above around $320 billion, which is the previous low in June, and ideally above the bear market downtrend and also the lows that were set in July and June. So that was the bear market low. So somewhere around that $400 billion. Now to the downside, is this the final low for altcoins? Well, the previous low was about 92% down. So the top to the bottom, the previous cycle, that is. 92% would set us somewhere out at around $80 billion. We're currently at 316 with a current low of about 280 billion. We know that stablecoins are 140, so it was essentially 50% of this market cap. So we're just trying to find in terms of a price, if that was a low at 280 minus the 140 stablecoins, because we know in the past cycles there weren't that many stablecoins in the game. That sets us out at a $140 billion low. So that low currently is right well within the zone here as wicked down to these highs before the market broke out. And that puts us in a pretty good price range along with the time range for this being a potential low if we minus off the stable coins as well. As for timing, this is looking reasonably good. Now, the main thing that we've looked at is it a macro time? Do we get caught up in the hype cycle? Like I looked at earlier in the video, looking at the psychology of traders and investors and going through the same sort of Wall Street cheat sheet, that psychology of a market cycle. When we look at where we currently sit, there is the possibility of many, many months ahead of great trading opportunities, lows to highs. You can see these were 255%. They lasted 6 to 7 months to the upside. You could do some shorting opportunities here of another 27 odd weeks, so another 6 months to the downside. And so the volatility does look very, very good over this period of time should we break out of key resistance levels. First being around that $320 billion market cap level. So that's that top that was set before the market broke down, and that was that June the June low of 2020 as well. We could be at a significant cycle low in altcoins, but we still don't have that confirmation yet on the likes of ADA, Solana, Matic, any of these major cryptocurrencies. I will show you here that Cardano is looking much, much weaker. Same deal with Solana compared to Matic, which is actually holding up above its June low. So there's more potential here with Matic over Solana and ADA just based purely on the charts. In the case of ADA, it is in this final capitulation zone that we've pointed out many, many months ago. Just looking back on the chart here, there is a possibility to overshoot the 16 cents. But at the end of the day, this is still looking like a downtrend. You still see all of the lows getting lower and the highs also getting lower as well. Case of Solana, great trading opportunities, and there's usually better trading opportunities in altcoins that have been absolutely slaughtered. So Solana has been slaughtered to the downside. You need to have pretty big bounces back to the upside. But unless it gets over $26, this is probably going to be a good traders market, and we could potentially see further downside unless it is able to get above 26 or at the very worst consolidate above $12. Basically that price range before it broke down. In the case of Matic, still holding around that 86 cents. You definitely want to see this thing back above any of these previous monthly closes here at around that 93 or so cents. And of course the dollar level is that psychological level. So still waiting on some macro stuff for the altcoins. Every single time in history that you see these pumps, whether it's Solana, whether it's something new, whether it's something old, you often get the big pump up like you saw here, and then that monthly drop to the downside where investors continue to take profits and wait to see where that next low comes in. So that is the key level, where this next low comes in. And in terms of timing, we've gone through that as well. Probably within the next sort of 12 to 15-ish months, we should get a rough idea of where that next low is. Is it going to be a strong crypto or a weak crypto, depending on where that potential low comes in? If in fact this is the current low for the cycle, which it is potentially turning out to be for this crypto total cryptocurrency market cap. But of course, each individual altcoin will need to be treated individually. They could be much, much weaker. And of course, we also have the Bitcoin chart to play with as well in future videos. But for now, that is a ton of information there. A huge altcoin update in terms of the cycle on altcoins. Make sure you do like and subscribe. Stay tuned to the channel. Check out the videos popping up on your left-hand side here. And if you want to trade some altcoins, stay safe out there. Channel sponsors, letting you know, Bybit and BitGet, huge sign-up bonuses still in this bear market. Of course, if you do want to trade, you know the deal. This is a business for you. And if you don't want to trade, don't worry. Go and do something else with your time. But don't forget to stay with the markets in your own way. I hope you guys found a ton of value from it. I'll see you at the next videos. Until then, take care and peace out.